Hello again and welcome to this week's video briefing. We're at that time of year again where for our clients we publish a prospect series of articles in the Daily Brief sketching out some of the key events, trends and developments that we can expect in the year ahead. And we began that today with our outlook for the global economy in 2013. Our prognosis essentially is one, I suppose you could say, of steady as she goes, with a rather dull outlook in the first quarter of 2013, but the possibility of some pickup later in the year and perhaps in the last quarter in particular. Now that's grounded on a number of suppositions, and I'm delighted to say that Oxford Analytica Region Head and Fellow at St Anne's College, Terry O'Shaughnessy, is here with me to examine some of those. Welcome, Terry.
Thank you.
One of them, of course, we should begin here, I think, is the performance of the US economy, where our supposition is the fiscal cliff can be avoided, and the recovery that we've seen, though it might be modest, occasionally faltering, nonetheless will continue because there is a capacity for resilience there which is easy to underestimate.
There is, and past recessions have demonstrated very clearly that the US is able to demonstrate this resilience and to come out of recession a little bit more quickly and a little bit more confidently than forecasters normally expect. So we are assuming that that trend will continue, but we are concerned about some risk factors. Yes.
Yeah. If we turn to the second of the suppositions we're working on, it's essentially that with Europe, though we don't see an immediate improvement in the outlook in the euro area, the indebtedness of the southern part of that continent in particular is going to be problematic. Nonetheless, there is a sense which we think it's reasonable to say the global dimensions of that are accounted for, factored in, and are not going to wreak havoc with the outlook in 2013.
Yes. I mean, Europe has historically demonstrated a capacity to disappoint, not only in the short run but in the long run. We have lots of examples in the past where even though a solution, if you like, to Europe's problems should be not beyond the wit of us to discover and to implement, Europe has failed often to do that. But I think we, in common with other commentators, are taking the view that the European project will not collapse in the forecast period.
And the further north we look, particularly on the continental side rather than the island side of Europe, then the more positive we become, certainly as far as Germany is concerned, where the export performance is traditionally strong, the manufacturing excellence is been maintained and should be in a position to benefit if we get, as we hold, the prospect of a pickup later in the year.
Well, that's correct. And also the other factor that's special about Germany is that Germany was very successful in weathering the 2008-2009 crisis. The policy package that was implemented in Germany was a sensible one, was effective, and it has led, in fact, to Germany taking the view that if we can do it, so can everyone else. Now that second part of the argument may not hold, but it certainly means that Germany is well placed. And the other factor is that the concerns I have and some others have for the medium term, where we get negative implications of the downturn that lasts for several years, those negative implications are not going to be relevant so much for Germany because, as I said, Germany did weather the storm much more effectively than other.
And for various reasons, Germany looks a rather better bet 2013 than either France or the UK.
Exactly. It's well placed. Its fiscal adjustment doesn't have to be so dramatic. And as you mentioned, its export, its positioning in terms of the export demands for its output is very strong. I mean, it does have issues, one of which is that because of its dependence on exports, it suffers more fluctuations in demand than other economies. And that in turn is one reason why I think German policymakers and German households tend to be very cautious.
other important dimension of our projection is the emerging market world, and here we're talking really about a cyclical return to stronger growth, and we're looking really at quite a big margin in terms of the growth of the emerging as opposed to the developed world. Here, China's rather important.
China is essential for our projections because it's such a big player, and I am concerned here that we're asking a lot of both Chinese households in rebalancing towards high levels of consumption and Chinese policymakers in managing what could be a rather difficult adjustment to a rebalanced growth path. Historical evidence, we have the experience several decades ago of Japan making a similar adjustment, and we have other economies who've gone through this process. But the evidence shows that that process can be a very long, drawn-out one. And certainly if Chinese households don't respond by starting to spend more, then it will be necessary for Chinese policymakers to step in to maintain demand, particularly if the rest of the world, excluding the US, doesn't increase its demand for Chinese exports.
You mentioned Japan with reference to its past experience there. I wonder whether we ought just to say a little bit about its prospective experience, because it's had a number of difficulties. I mean, we know obviously about the Fukushima side of things and the whole energy dynamics, but it's unremarked often, and that's peculiar given that it's a very large economy and an important one.
Well, I think one reason it's unremarked is that commentators find it very difficult to read. The data is still dominated by the effect of the difficulties that the earthquake and tsunami created in Japan and the impact of that on the Japanese economy. So it's rather difficult to predict what sort of growth path Japan is actually going to be on after those factors fall out of the data. So actually there's more disagreement about Japan amongst commentators than about most other countries. We take the view in Oxford Analytica, we are slightly more pessimistic than some others because we also see, we focus a lot on political risks, and I think our view is that the politics in Japan make agile responses to the difficulties they face rather unlikely to emerge.
I think that's right, and that's a good point, I think, on which to conclude, Terry, and it has to do with the severity of the crisis through which we've passed. Our outlook is, how would we describe it? I suppose very, very cautiously optimistic about a gradual recovery, though much of it's cyclical. But I know one of the things that you've been keen to draw to our attention in our projections going forward is the persistence of adverse currents of damage done that is not addressed effectively on the policy front, that we see reflected in weak investment levels, trade really crawling along, and these aren't things that either the world can snap out of or that can be left to endure without accruing lasting damage.
Yes, I mean this is really to do with the interaction of short-run demand-led forces, both positive and negative, and the medium-term consequences of those. And untangling that and making sense of it in a particular conjecture is difficult but important, because if we don't do that, then we assume, as many forecasters do, that we just return to normal in 2 or 3 years' time. And that habit of assuming that the future is just like the past, and more particularly that you get back onto the same growth path that you just left, I think is going to lead us, is going to be wrong. And it's the interaction of short-term factors with these medium-term processes, including slowly moving variables like demographics, changes in household savings patterns and consumption patterns, that actually are the drivers, the important drivers, going out 5 years or 10 years. And we are, I think, too much focused if we only look at 2 years out. We have to keep in mind that what happens over this year and next year is going to have consequences for 5 years and 10 years out.
That's a very salutary note on which to finish. Thank you, Terry. And thank you very much for watching. I do hope you've enjoyed this discussion. Our prospects today, as I indicated, focuses on the global economy. But during the month of November, we will be covering every major region of the world and highlighting the key events, trigger points, trends and developments that we think are out there and that may affect you in your investment decisions and your business strategy. If you'd like access to that material, we'd be delighted to hear from you. Do contact us via our website. We look forward to hearing from you.